Okay, and we're so upbeat, right? We're talking about what kind of tax impact there would be from this election. It's not like I know who is going to be the president, but I can tell you what is about to expire and is waiting for the residents of the White House to make a call, right? So today's webinar, it is about how will the election impact taxes. In front of you is our website, folks, and you can come over here and to search our website, understand our firm, and all of the webinars we are doing right now, right here, is going to be posted on YouTube channel. You can subscribe to our YouTube channel, then you'll become one of the 6,000 YouTubers who are following us and learning tax, accounting, life lessons from Community CPA's YouTube channel. Let me share with you the PowerPoint I prepared. So to guide our conversation, to make sure we get through this within 30 minutes. The organizer of the webinars here, Catherine and Grace, had already imposed sanctions on me if I go over too long, and they're going to impose penalty. So we need to stay with our timeline, okay? We have rules and regulations. Unlike those who run the elections, they don't need to be subject to any rules and elections. But of the election, what we do? We do webinars, we have rules and regulations. Okay, how will the election impact taxes? And the first two slides is a place where we brag about ourselves. Of course we need to. Otherwise, how do you know about us, right? And this firm started back in 1998. And one client, one person, which was me, and I funded the organization, but we go on to today with 40 professionals speaking 10 different languages internally. And we have 12,000 more clients in our hands, and we have 4 branches, plus the last one we just did this year, and in Texas, Houston, Texas. So that is our newest branch in our series of branches. And someone was asking me that, oh, Ying, how do you know where you go to do the branches? Very simple. We just follow our clients. And we know where our client lives, and we sort it out, figure it out. Oh, wow, there is a whole bunch of people from Houston. Let's just set up a branch there. And that's how we did it for the other branches. So no secret, right? And because of the YouTube channel we have, it does bring some impact to how our clients are. So we do have clients all over the country, and they all follow us on the YouTube for maybe several years. We have a pretty new clients came on board, and the gentleman, the owner, said to me that he has been following our YouTube channel for the last 4 years. So he knew me more than I know him. That's what he said. Ying, you don't know me, but I know you really well because I listen to all your webinars. So there you go. So that's how we approach our clients, right? And then you can pick the best in the nation. And we are the best in the nation. Yes. Saying it with conviction, yes, right? Appointment with Ying at 8 a.m. and 10 a.m. These are the 2 books I wrote. I wrote the first one in 2019, the second one in 2023. So I am working on the 2 p.m. And you're probably wondering, what's the 8 a.m. and 10 a.m., 2 p.m. and 6 p.m.? What are you doing? I am writing a life of the business. You start at 8 a.m., you grow at 10, and you expand at 2, and you retire at 6. So that is the book. And I'm still writing the third one. And until I finish expanding Community CPA, I would not be able to finish the 2 p.m. So I'm just hurry up and wanting to finish the phase of expansion so I can finish that book. All right. No responsibility disclaimer. This is usual stuff. You know that you take responsibility, not me, right? I'm just going to take responsibility for giving you the right content you want to see and hear. The possible tax landscape for businesses in the future is changing. Get ready, okay? The upcoming presidential and congressional elections may significantly alter the tax landscape for business in the United States. The reason has to do with the tax law that is scheduled to expire in about 17 months, less than a year. I mean, a little bit over a year, right? A year is 12 months, 17, 5 months. So this is how the politicians in Washington would handle it, because this is the election year. So once they come into power and they would look at the tax law, there's a bunch of them are about to expire. So obviously someone has to make a decision of let it expire, don't expire, or expire 1/3 of it, or totally trash it and make a new law. So, right? It is opportunity for every congressional leaders coming into play this fall to have this opportunity to exercise their understanding of tax. The Tax Cuts and Job Act, that one is the one we're talking about gonna expire. So let's look at this one. This one was put in law in 2018. President Trump became the president on the 16th. So he worked on the tax cut as he promised to the richest, right? So those laws take effect in 2018. You remember one of the most famous one was the 15% corporation tax rate. Now it has become 21% and it stays permanent. So that one come out of the Tax Cut and Jobs Act, but it is a permanent one. So it doesn't subject to this expiration. But permanent one doesn't need to be permanent. The residents of the White House, the Congress can always come back and make a change and make a new law. As we get closer to the law sunsetting, and you may be concerned about the future federal tax bill of your business. The impact isn't clear right now because the Democrats or Republican has a different views about how to approach to the tax law, how to approach the stimulation of the economy. And one thing I want to give you my 2 cents. Whether it is Democrats or Republican, even though their doctrines may be different in terms of business development, but I want you to really believe with me that both parties are trying to do the best to keep the country at the top of the food chain, right? We're a very advanced country and we continue to be the best place people want to immigrate to, and our economy is always the best and we drive the world, right? That's kind of us. That's kind of the USA. And with that said, there's no policy is really meant to put the country to the bottom. Even if we don't like the tax cut just for the richest, and because the middle class is not being served, but again, if the richest has a cut, the money they have is being doing something. In the way it is also doing the economy. But of course, to only cut the richest, not the middle class, it's not resting the populations. You got the populations need to enjoy their work and getting their paid and then knowing that they have money to spend. So that's important for the peace of the society. And for everyone to feel like they have a say in the system, we go through election, right? So you can cast your thought, do your pitch, but I want to say that, I don't know about MAGA Republican, but I'll tell you the Republicans and Democrats are all there for the best of the country. And expiring, these are the things that's expiring. I will go through it really quickly for you. Some of them, you hear it, you feel like, I don't know what that is. No worry, that is because it's not relating to you. The individual income tax rate and the bracket, that one got lowered through the TCJA from 2018. But now expires, that means we're going to go back to 39.6% top rate for the top earner of the income, AGI, right? Right now it's 37. So we could revert back to 39.6. Individual taxes will grow. Standard deduction, right? Remember, the standard deduction was raised through this TCJA Tax Act, but that is coming to the end. So you may ended up going back to the lower standard, so everybody will start to do itemized deduction. Child tax credit. The enhanced child tax credit, which doubled to the $2,000 per child with increased eligibility, right, will convert to the previous level, $1,000. So that is expiring. Pass-through business deduction. That QBI, 20%, that famous 20%, like when you have an S corporation, you made $100,000 profit, and when it passed through to your 1040, and you only report taxes on the 80, right? That one expiring. Estate tax exemption, and it will reduce it by half. Right now, it is about 13.6 million. Which means that if you have a state below that and you don't have a state taxes, above that you do. And now with this expiring, it will go down to about 6. Okay. State and local tax deduction cap. Remember, like they raised the standard deduction, but they took away the state taxes that we normally can put in to our Schedule A to beef up our itemized deduction, right? And that President Trump lowered that to 10,000. I totally can see why he did what he did in that TCJA, because he lives in Florida. It has all the benefit for the state with no income tax, and for the state with income tax, like Minnesota, Iowa, like all of these Midwest states, and is no good. And we want that to be reverted. And so that 10,000 limit, they call them on SALT, is a state and the local tax deduction. That will expire. Congratulations. I want that to expire. And we have clients, the state taxes is like $120,000 a year. They can only deduct $10,000. Never mind about property tax and the car tax and the stuff like that. Why would you even bother? You can't even deduct anything anyway. So that's your 10,000 limitation. I really know that one is really hurt for the Midwest mid-wage earners. Yeah, you hurt. I know that. And the personal exemptions are going to be. It is already eliminated. Now it's going to expire. Going to come back. You may not remember that personal exemption is kind of what we call the head deduction. Like each person in your household, and you can calculate. I don't remember the amount. 2,800. Then you can calculate by number of your people in the household, then you can deduct that amount. That one expires because it's coming. If it expires, it's coming back. Alternative minimum tax also got increased, so more exemption can be allowed. Now it is going back to the previous number. So those are things expiring. Even just this list. Ladies and gentlemen, we didn't even talk anything deep. You already know that there are things we like, there are things we don't like. You see how the judgment on the tax changes is so vast different between one person to another. So I want you to kind of let go of the judgment and only knew the timing of the change, then be proactive and get yourself on the tax planning. You will still be on the front end of saving taxes, and even though the rules and regulations are changing. And what stays permanent? Number one, 21% corporation tax rate. That stays permanent. And in our world of a permanent, tax world of permanent just means there's no new tax law, no new tax rules coming out to override this. Anything can change. Tax is a human-made regulation, folks. It's supposed to be used to stimulate the economy in certain ways. So 21% permanent for now. Long-term capital gain tax rate is permanent. That one is the 20% maximum on long-term, remember folks? So that is permanent from that Job Act. Income tax rate. So I want to kind of highlight a couple of things here for you. That TCJA cut the maximum corporation rate from 35% down to 15%, then raised a little to 21%. Okay? And so it also lowered the rate for individual. That act lowered individual from 39.5% down to 37%. 39.6 down to 37, right? And while the individual rate cuts expires now, the law made the corporation rate permanent, right? So this is the income tax rate discrepancy going to come in even larger. So let's say they keep it 21%. Then they make individual income tax rate goes up to 39. What's going to happen in the tax landscape? There will be more of corporation got set up to enjoy that 21%. And then those sole proprietorship and the things that pass through to 1040, nobody would enjoy to pay 39.6% taxes while they had already paid 37 for a little bit, right? That's income tax rate. See, here I am talking about planning. Plan. Qualified business income deduction. This is where, if you remember, when you get a K-1 from your S corporation or your LLC, and then you put them into your 1040, if you got a K-1 for $100,000 net income, and you only really pay taxes on that 80, this is the 199A, section 199A, qualified business income deduction. So this is expiring. So what's going to happen? That means your pass-through income no longer have the 20% discount. Then you need to figure something else out, right? Bonus depreciation phase out. You know what that is, because back in, it was reduced to 80% in 2023 and 60% right now for 2024. So we will do your taxes today. And when you did a leasehold improvement, supposedly, if it is in 2023, you can deduct 80%. But in 2024, you can deduct 60%. And 40% in 2025, 20% in 2026. And we are just talking about bonus depreciation. I don't want folks to think that, oh, that just means there's no more benefit for me to do big build out and stuff like that because I lost all these fast depreciation. Don't say it too early. There is another section called 179 and not really talked about because it's not in the TCJA Tax Act, but it is another way to deduct your depreciation fast. All right, potential outcomes. So now, I don't have the crystal ball, so I don't really know what the, I have the crystal ball. I actually know who is going to win the presidential election. I'm just not going to tell you here. But I don't have the crystal ball to know that whoever is elected to be the president and what kind of economic policy or tax policies the tax act they want to do. Because that is so much a balance, it's the balance of the power inside of the Congress. So really, we have this three branch of government, right? So you need to come together. Tax law has to be enacted through Congress, approved, signed by the president. So those are the things we need to know. So it's not some kind of prediction gonna happen. I'm pretty sure depends on how our economy is. The presidents, the Congress will look at where we are and come up with a plan that is mutually beneficial for the rich, the poor, and the middle. And that's just the way how we have been running the country. So there's 4 scenarios, and I know it's a lot of words on here, but it's really simple. So, they can choose the option of all of the TCJA provisions scheduled to expire will actually expire at the end of 2025. If they fight and they don't come up with agreement, then it's just going to expire at the end of 2025. The number 2 option is all of the TCJA provisions scheduled to expire will be extended past 2025, okay? Or maybe even make into permanent. The third one would be some of the provision will be allowed to expire while others will be extended or made permanent. Then the last one is some or all of the temporary provision will expire and the new laws will be enacted. That provides different tax breaks and different tax rate. It is something can be changed, right? That is why one of the safest job on earth, no, I would say one of the safest job in United States of America are the people like us. We're the tax people. Tax never gonna end and it always gonna change. So we can't even expire. We have to be always renewing our knowledge, right? Isn't that cool? So if you haven't decided on your career yet, then consider to be a tax expert. All right. When will you be impacted? I know that's the question you're going to ask me. And your tax bill will be affected in 2026 because they expire in 2025, right? So 2026, when you are doing 2025 taxes, and you will be doing it on the last year, the same rule. But your 2026 taxes that you're doing it in 2027 would be a different one. By the time you file your 2025 tax return in 2026, you will compare 2025 and the 2026 estimated, you will see the changes. But this is enough time to react and to plan. In the fourth quarter of 2025, plan your 2026, right? The impact is also related to your income, your filing status, where you live, whether you have children or dependent, things like that. QBI deduction will trigger the pass-through entity to reorganize. Maybe it's no longer worthwhile to be the way you are doing because your individual tax rate might went up to 40%, and here you lost your 20% on QBI deduction. What's the point to be in the pass-through? You could stay on the corporation paying 21%, folks, right? So corporation tax rate versus individual tax rate is going to come into play a big time. Now, considerations and the thought. And this is something I want to kind of communicate with you. Your tax situation is in the hands of policymaker in Congress. Whoever controls the Congress will implement the version of policies of control of this controlling party, right? So keep in mind that tax proposals can become a law only if the tax legislation pass both houses of the Congress and is signed by the president. So there is a process. There is a process with both Democrats, Republican, and they facilitate individuals' comments as well. And you can talk to your congressmen, women, you can talk to your senator to impact on the policy, right? There is time for you to do that. If you care, you get involved as a citizen. As the TCJA provision gets closer to expire and the election gets settled, you know that the 2025 year-end planning would be the most necessary one for you to do. 2025 year-end tax planning is a thing that our firm, we do it in the last quarter of 2025. So every year, the last quarter is what we call tax planning season. We have tax season in the beginning of the year, the middle of the tax season, like right now, because the company extension is due on September 15. But right after that, we go into this final stage where we do year-end tax planning. And this is where I'm saying to you that if you don't do that, you have never done that, in 2025, that last quarter, you have to have one. Because the tax is affecting everyone, not just the business. To learn what might change and what tax-wise moves that you can make, if the law change in different directions, Community CPA monitors the changes for you. We come over here, we talk to you. No matter what policy Congress roll out, based on your business situation, we, our firm, will reposition you on a new tax saving strategy map. We won't let you go off dry and not knowing what's going on. We knew what is coming, and we can help you to prepare. And to do that, you actually can book our tax planning appointment way early. You don't have to wait until 2025 to book 2025. You don't have to wait till the fourth quarter to book your 2024 tax planning. And you can go on to our website and just blocking in our time right here. And or you can call in and we can schedule you way ahead of time. So you get prepared, we get prepared, we come in, we take the situation and we give you the scenario, the things that you should do or should not do or do it right now. Then you get yourself onto the best platform to save taxes, right? To grow your business, save taxes. All right, so subscribe to our channel. I always say that. And give us a thumb up when you like our video. That is the only way for me to confirm that what I am doing, screaming here, it makes sense to you. I want to be rewarded, not by a monetary measure. It's just simply by the clicks, the thumbs up, the subscriber numbers that we have here. And our website, you already know, www.communitycpa.com. And our website is a place where you can log into the portal that you have with us. You can onboard with us via our website. We have this tab called Onboard with Us. When you do that, you load your information, you load your communication. It's private, it's secure, and we have someone checking that area on our database to make sure that we receive you warmly. And you can email Catherine at communitycpa.com to tell us what you'd like to hear from this webinar system we have. And we're generating topics by hearing from you. Sometimes we just simply go with our gut. And I felt like I need to talk about this. I'm still thinking what I should come about to talk about on November 6th, that election day. So make sure you vote, right? And this time, last time I did a mailing in vote, but this time I am going to go in person to vote in person. I want to make sure my vote is going to count. Okay, call Community CPA 515-288-3188. We're open 6 days a week, folks, and you can't find another CPA firm work 6 days a week. And we are not only just workaholic, we also love our clients. So take us who we are. This is just who we are.